you with the area of AFM, that is Accounting and Financial Management for Bankers. What are we going to talk today? Today we are going to be talking about the area of various concepts related to Module A. So I have compiled a lot of questions from the area of Module A. Let's look at it, everyone. The transactions between owner and business are recorded as per periodicity concept, going concern concept, prudence concept, or business entity concept. When we talk about these transactions between owner and the business, we are treating the business and the owner as two distinct persons. When do we treat them as two distinct persons? We will be treating them as two distinct persons when we are following business entity concept. This particular topic is extremely important as this topic is asked in the examination a lot. The information provided in the annual financial statements of an enterprise pertain to business industry, economy, individual business entity, or none of the above. The information provided in the financial statements of the enterprise. When we talk about financial information, see how do we get the financial information? First is profit and loss account, and the second one is balance sheet. So if we look at both these things, ultimately it is business industry. I'm sorry. So it talks about the entire business industry. This is not a personal transaction that we note down in it, right? We record something that relates to the business altogether. Here comes the next question. It says, which of the following is not a transaction? Goods purchased on cash basis for rupees 1000, salary paid for the month of May 2010, land purchased for 10 lakh, or an employee dismissed from the job. See, when we talk about transaction, it has to be a monetary one. There should be money involved in it. So the transactions which are recorded in the business should relate to the business and should be something that we can quantify. If a person is dismissed from the job, this is not a quantification. If the person is not working anymore, this is not quantification, right? So in this case, the answer is D. That is, an employee dismissed from the job. Next question. All the following statements are objectives of accounting except providing information about assets, liabilities, capital, maintaining records of business, providing information about performance of the business entity, providing details about the personal assets and the liabilities. See, accounting does a lot of work. It gives proper information about the financial position of the organization, financial statement of the organization. It tells about the performance as well as position. So it tells about all these things. It maintains the records of the business as well. So first is correct, second is also correct. Providing information about the performance of the business, that is also correct. The last thing is it relates to something of owner. It doesn't relate to the owner. It relates to the business only, right? So in this case, the wrong part of accounting would be providing details about the personal assets and the liabilities of the owner. Done? I'm sorry. Next question. Payment of personal expenses of the owner of the business need to be recorded as drawings, liabilities, expenses, or none of the three. Payment of the personal expenses of the owner. See, if we talk about the personal expenses of the owner, personal means something that relates to that particular person himself. It is not relating to the business. So in this case, what is it gonna be? It is gonna be drawings. ठीक है ना? Drawings is stated as something which is personal. Then the purchase journal records what? All the purchases. Visible now? Purchase journal records purchases, sales, all the credit of the goods dealt by the firm, credit purchases of the goods dealt in by the firm, or cash purchases of the goods dealt by the firm. See, purchase journal is also called purchase day book. It is also called purchase book. ठीक है? This is actually a subsidiary book. When we talk about the subsidiary book, in this case, what would be the correct answer? It would relate only. See, cash book took away all the transactions which has cash element in it. In this case, it is cash purchase is not to be dealt there. It is to be dealt by sorry. In this case, cash is dealt by the cash book. So credit purchase of the goods would be taken by purchase journal. It takes care of exclusively all the credit purchases, nothing else. Done? So in this case, the correct answer is the credit purchases of the goods dealt in by the firm. Which of the following lists the balance and the title of the accounts given in ledger on a given date? Profit and loss account, balance sheet, earnings statement, or trial balance? It talks about the list of the balances, that means the closing figure, and the title of all the accounts in the ledger. See, I prepare ledger of cash, I prepare ledger of bank, I'll prepare the ledger of capital account. I will end all the other topics there. So that is where I'll get the particular answer. So in this case, all these points would be taken up, their balances would be noted down, be it the debit balance, be it the credit balance, and we will record it as per the trial balance. It is a summarized statement of all the ledgers. Overall, when we prepare this, the debit side should be equal to credit side, and this is not going to be a conclusive proof. It can be the proof that there is an arithmetical accuracy, nothing else but just the arithmetical accuracy. Okay, I hope it is visible right now. Okay, so in this case, this is debit equal to credit, and this is just to check the arithmetical accuracy and it's just a statement, and you will find that somewhere down the line in many books they don't even call it a part of accounting cycle. It's a working paper. Okay, it is treated as a working paper. Here comes the next question. Under the straight line method, we are talking about depreciation now. Under the straight line method, depreciation is calculated on WDV, scrap value, original cost, or none of the three. See, when we talk about SLM method is also called original cost method. Original cost method. It is also called fixed installment method. It is also called straight line method. So there are multiple names for this one particular method. Under this method, whatever the purchase value is, we take the purchase value, and from the purchase value we will deduct the various things. That is, whatever the depreciation would be for every year. If it is 10,000, every year we are going to deduct 10,000 out of it. Okay? Only one specific amount is deducted, not the entire thing. Done? So in this case, the correct answer is original cost. Now, okay, we are done with the fixed installment method. Na? That is the other name. Now this is the next question. This question relates to the area of bills of exchange. Again, an important chapter of module A. If the date of maturity of the bill is a holiday, then the bill will mature on next working day, preceding working day, holiday itself, or other agreed day. If the due date of the maturity of the bill is a holiday, if there is a holiday on that day, see, if it is an emergency holiday, then we will move on to the next day. For example, if any important official dies, this happens now when any specific CM of a particular state dies, so they do this, right? They declare an emergency holiday on the date of an in case of an emergency holiday. We will say that in the books of accounts the bill will become due afterwards. But if we know that the particular day is going to be a holiday, then for example, we know about 2nd of October, we know about all these dates already, na? So then there are certain dates which they are day offs. So if the date of maturity of the bill is a holiday, then the bill will mature on, it will be maturing on preceding working day. I'm sorry. So it will mature on the preceding working day. That's the rule. So it's gonna be the preceding working day. If on that day is a emergency holiday, then the following day. If it is 2nd of October, 15th of August, then 14th of August. 2nd of October, then 1st of October. So that would be the rule. They also give after the due date, it is actually due date plus 3 days grace. There is a grace of 3 days. Then another question from this area. A promissory note is drawn by dash in favor of. See, in terms of bills of exchange, There are two kinds of bills. One is bills of exchange and one is promissory note. What's the difference? In this case, you order the other person to pay you money after certain period of time. Under a promissory note, you promise to pay the other person. There's a difference now between a promise and an order. So in this case, let's look at it. When we talk about a promissory note, it is drawn in favor of drawer and drawee, maker and pay, payer and pay, or drawer and pay. Promissory note is basically a promise by one person to the other person. For what reason are we making a promise? Promise is basically I promise to pay you certain amount of money after certain amount of time. Okay? So in this case I am promising. The person who has to pay is promising. It is issued in the name of the person to whom we will make the payment. So in this case it is I am the maker and I will make it in the favor of the pay. That means the pay I will pay you after certain amount of time. Okay? So it is maker and pay. In terms of bills of exchange, there is an order, an unconditional order to pay a certain amount of money after a certain period of time. So it's an order. What do we do here? I order the other person to pay in such a way that I am the drawer. The person who will be paying this money is drawee. He can either pay to me or anybody whom I say. So he is actually the payer as well, and the person to whom he will make the payment is pay. It can be either me or any other person that I will state. Done? Everybody visible right now? So bills of exchange is an order, while the other one is not. Done? Done? Chaliye, then let's move on. Dash principle requires Dash principle requires that the same accounting method should be used from one accounting period to another. Conservatism, consistency, business entity, or money measurement. See, there is no problem in using a different method. They are saying if you are using method A, then continue using method A. If you are using method B, then continue using method B. If we have to use only one of them, then use one. There is no harm. If even in case you choose method B, then continue with method B now. Don't frequently change the method. That's the purpose of this area. So in this case the correct answer is consistency. Conservatism says anticipate the losses but not profits. ठीक है. Business entity says businessman and the business are two different things. Money measurement says measure everything in terms of money. If you can measure in terms of money only, then you can record it. Right? The left side of an account is known as dash and the right side as dash. We have something called LHS and RHS. The rule is debit is equal to credit. This is where we bring money into the business and this is how we spend the money. So is this gonna be a debit and credit, credit and debit, liability and asset, or none? I already talked about the answer. It is debit and credit. Right? So this is where I end my session. But before I end my session, let's talk about our courses that are going on our platform Adda 24/7. That is www.adda247.com. You can go and purchase our courses. How can you go and purchase it? Let me show you exactly where to go. You have to go on to the area of www.adda247.com. Once you go on to the area of Adda 24/7, you will find the area of JAIIB and CIB. Okay? As soon as you go on to the area of JAIIB and CIB, then you have to go on to the area of JAIIB October. In this case, you will find all the details. Our Mahapack is currently having double validity. So you can take up the batch of double validity. All you can do is you can use the code MOON80 and get a discount of 81%. There you have 600 hours of online classes, 316 test series, 315 ebooks, 637 videos, right? And we have got 6 plus 6 math. If you buy it for 6 months, you get it for 12 months. You know? And at the same time, if we talk about it, we are getting multiple things there. That means you will get our courses, you will get marathons, you will get mini marathons, mega marathons, you will get the doubt classes as well as a practice paper from our side. There are 316 mock tests which are added for you just in this area. And at the same time, not only live classes are available for you, not only the subject wise, but also the revision batch will also be available for you. If there's an MCQ or numerical classes going on, that will also be available for you. So if you're looking forward towards buying JAIIB Mahapack, that has got everything related to JAIIB. There, if you want to take up the JAIIB plus CIB Mahapack, that is also available. You can take up the JAIIB and CIB ka Mahapack as well. There is bank promotion going Mahapack also, right? And then we have the offices Adda Mahapack as well. So you can take up any of the packs, JAIIB Mahapack 2.0, JAIIB CIB Mahapack 2.0 and Office Adda Mahapack, where you get JAIIB, CIB, then bank promotion as well as all the details regarding the same. That means you are getting IIBS certification in it, one particular course, and you get everything in this one particular course. So if you're looking forward to it, then you can use the code MOON80 and get it at maximum discounts, right? I'm sorry. So if you're looking forward to it, then kind of what topic are we talking about today? Today we are going to talk about the area of company accounts. Okay, so with this we are going to talk about the first thing, that is, what do you mean by a company? Company refers to a separate legal entity. Company can buy things in its name, company can sell things in its name, company can buy property, company can sell property, company has its own PAN card, है ना? And the companies are just like you and me, they are also persons. But how do they maintain their books of accounts? And do they maintain their books of accounts in a different manner? Yes, they do. Why? Because the companies are supposed to follow the Companies Act 2013. Earlier was 1956, which was replaced in 2013. Along with that, the companies also have to follow the Income Tax Act 1961. So they follow all these things, and their books of accounts are maintained and submitted according to these two specific laws. So when we talk about the JIB November, so we have this company accounts there, है ना? So when we talk about company accounts, this is in module B. So let's talk about it in detail. Here comes the first question, everyone. What is the primary source for a company? What is the primary source for a company? Borrowings, in equity shares, debentures, or reserves? What is the primary source for a company, everyone? Primary source for a company is the shares. See, when you form a company now, it can either have shares, or that is their owners funds, and the second can be outsiders fund. Owners funds is of two types. It is equity, and the second one is debt. Under equity, these people are the ones who have the voting rights. They take the risk of the organization. These people get the leftover. If the company earns a lot, first of all, outsiders will get the interest, because we take loan from them. We will pay the principal and as well as interest to them. Then the one mistake there. One is equity shareholders as well as preference shareholder. Now there is a particular kind of shareholder which is between equity and preference shares. It stands here. They are called preference shares. Who are preference shareholders? Preference shareholders are those people who says equity and debt, who says I want fixed dividend. So we say okay, we'll pay you dividend. And he says give me dividend before equity shareholders. I want money and I want to get the money before you pay to equity. We say okay. And he says when the organization is dying, before it is dead, at the time of liquidation, whatever money is left, you pay me before equity. Because of all these things that they are asking, right? They are asking two preferences over equity, right? So then these preference shareholders get the preference there, but at the same time they don't have any voting rights. They get the voting rights only if the company fails to pay the dividend for continuously 2 years. That is where they get the voting rights. Otherwise they do not have any kind of voting rights. So this is the entire blueprint of the particular area of company accounts. So in this case the correct answer would be equity shares. Got the question, everyone? Now let's look at the next point. What is the maximum number of members in a private company? 50, 100, 200, or no maximum limit? In a private company, maximum is 200. Okay? The maximum number of members in a private company is 200. Okay, let's move on. It is 200. In a public company, maximum for a public company, maximum number of members, there is no limit. Minimum is defined, minimum is 7. For private company, minimum is 2 and maximum is 200. Okay. The number of directors required in a public company is 3, while in a private company it is 2. So if you are noting it down, then kindly note it down. Done. Then comes, there is a certain capital which is called reserve share capital, part of authorized capital to be called at the beginning, portion of uncalled capital to be called only at liquidation, oversubscribed capital or undersubscribed capital. When we talk about the capital, now capital is of many types, but when we talk about strictly about reserve capital means that kind of capital which is kept as You remember when we were, I think this is what I remember, maybe that might be in your childhood as well. When I was very young, my father used to say that he had a particular two-wheeler as well. That two-wheeler was some scooter there. There was a particular brand called Vespa at that point of time. So my father had that, and he used to say कि it has got a reserve. I think I forgot to get the fuel filled. So right now I'll just get the fuel filled first, and then we'll go anywhere. So I heard this particular term quite a few times, that you should always get your petrol filled up before it gets the reserve area. Then in the cars even he was always like that you should always fill up before the red area comes. I said okay, and he used to still say that this is where the reserve enters. So I was like, what is it about? He says that the entire, you have a full tank, that means you have ample of fuel in the particular car or vehicle, what would say. But when it hits the reserve, that is the last moment. After this portion is over, then nothing will work out. So that means reserve capital is a lender, it's a last resort. When we talk about this, when the company liquidates, and in case the money that which we have already got, which the company has fallen short. So the people who had given a commitment and we haven't asked any money from them yet, we call them reserve share capital. What do you mean by reserve share capital? The share capital which is kept at the time of liquidation, we will call these people and ask them to pay for it. It is part of the authorized capital to be called at the beginning, portion of uncalled capital to be called only at the liquidation, oversubscribed or undersubscribed. Oversubscribed is, I said that pata hai, I have only 10,000 shares, and you said, ma'am, kindly pay us more. Undersubscribed capital, that means if I asked, oversubscribed is, we issued 10,000 shares, people applied for 14,000 shares. This has happened with, I think, SBI credit card shares, that it was oversubscribed by 7 times. Not 1 time, not 2 times, but 7 times. Think about it, everyone. It's a huge number, isn't it? Now when we talk about undersubscribed means that I said, people, we are issuing 10,000 shares to you, and people should take at least 90% of it. That means they should take at least 9,000 shares. We asked people to apply for, they have given lesser, and over means we asked for a certain amount and they are giving more. And when we talk about the part of authorized capital, in this case a reserve capital is, that is kept for liquidation, the money that we can ask for when the money falls short in terms of liquidation. That is portion of uncalled capital to be called only at liquidation. Here comes the next journal entry, everyone. This question says that when a company issues a fully paid shares to the promoters. Promoters are the people who give birth to the company. They are the ones who gave rise to the company. So for their services, the journal entry will be bank 2 share capital, goodwill 2 share capital, then promoter personal account 2 share capital, and then we have promoter expenses 2 share capital. Okay? When the company issues fully paid up shares to the promoters, basically they are paying for the incorporation of the company, na? Hai na? So basically what I can do is, we can call the expenses for which they have paid is incorporation expenses. That means the money that we pay for birth of the organization. Incorporation expenses 2. We are not paying them in cash, are we? No. We are paying the promoters in terms of shares. So can I say to share capital? Okay. Either this is the journal entry. One thing is that you have incorporation expenses to promoter, and then you pass the journal entry, that is promoter to share capital. Done, everyone? So in this case, what would be the answer? The answer would be goodwill to share capital. Acha, we can take up incorporation as well. Goodwill is not the point there. I think I'll go for promotion expenses is normally known as incorporation expenses. So I'll go for the incorporation expenses there. Okay, since it's not there, I think then only. Acha, haan, there are 2 points. Either you actually take it to the incorporation point. If you do not want to take it to the incorporation expenses, then you take it to goodwill. Then you take it to goodwill. Done? Next point, the security premium cannot be applied for paying dividend to members, for issuing bonus shares to members, for writing off preliminary expenses to company, for writing off discount on issue of debentures. Security premium cannot be applied. Security premium is the extra money that is given in terms of the shares. If the share is of rupees 10, then the company says we are a reputed company in the market, we should get more than that, so they are looking forward to 12 rupees. That is basically security premium. It cannot be applied. Where can it cannot be applied? For security premium reserve is actually a specific reserve. It can be used only for 5 purposes. You cannot use it for any other purpose other than the 5 purposes which are defined. It is for paying dividend to members, for issuing bonus to the members, for writing off preliminary expenses, or for writing off discount. The correct answer is for paying dividend to the members. It is used for paying the dividend. It cannot be used for this particular purpose. It can be used for giving bonus. It can be used for writing off the preliminary expenses and all. And preliminary expenses are those expenses which are incurred before the company is built. So basically I was trying to make the company, so I had paid for the documentation, CA, CS, the legal charges, everything was paid. Once the company was formed, these expenses belong to the company only, na? They will call it preliminary. It's a kind of capital expenditure, but since it's already incurred, we call it a miscellaneous or a fictitious expenditure kind of thing. And this expenditure is capitalized and we divide it by 5, and every year we write off a part of it. So this is something which we talk about preliminary expenses. Writing off discount, when we have given discount on issue of debentures, we will write it off from here only. Securities premium does that part, but it is never used for giving bonus dividend. Dividend is paid only out of cash. It is not paid from anything else. Next point, what is the primary objective of financial reporting for a company? Why do they do the reporting portion, everyone? Is it to maximize the profit, or to provide information for decision making, or to minimize the tax, or is it to satisfy regulatory requirements? Why do we do it, everyone? What's that one big solid reason for which we're going to look forward towards primary objective? But every company is required to prepare their books of accounts, and they are supposed to keep it for at least 7 years. As per Income Tax Act, yeah, you should. And then if the case opens, then they can actually ask you up to 16 years. That is another point there. So in case of something where the person, if they are sued or something, then they have to pay a lot. Then this is basically this is to provide information for decision making. I think I can go for all these points, but the primary objective is to provide information. That is true. Then it is also to satisfy regulatory requirements, because for a company it is compulsory to prepare the books of accounts. And if you know about your amounts, then you can maximize your profits and you can actually minimize your tax as well. Technically all these points are the objectives of financial reporting, but to provide information for decision making is the primary one, because they are supposed to provide this information. Public companies have to provide this information to their shareholders. Okay? Otherwise, why would people invest their money into the organization, right? So in this case, to provide for decision making. Here comes the next question. When shares are forfeited, the share account capital account is debited with. Acha, let me talk about the share forfeiture now. Forfeiture. What do you mean by forfeiture? In a particular company, when we talk about the share capital means the money that is divided into different units, है ना? And we ask people not to pay in one installment. We ask them to pay in 4 different installments, 4 to 5. First is share application. People will apply and give me a advance kind of thing that is called share application. Then we allot them shares, which is called share allotment. Then we can ask for share first call, and maybe there is another call, and we can also call it share first and final call. Now the entire 10 rupee, which is the face value, is divided into 2, 3 or more calls. For share application, it might be 4 here and 3 here and 3 here. So someone would have paid this 4, someone would have paid this 3. Till this 7 rupees, they have paid everything. After that, they are unable to pay. Company tried to contact, company tried to remind them, company has sent mails, they have tried everything. Now they are annoyed with it. They say, after this, we are striking off your name from the list of our shareholders. You are no more the shareholder of the company. They say, what to do about it then? They say, if the person is no more the shareholder of the company, then what will we do? Whatever money they have given, we will not return this money. This is something that we are going to keep as a penalty from them. So whatever money which has been already called up, we will cancel that part. If we have called share application and after that the person is not paying share allotment, and then we decide to write off his share, then you have already called 7 rupees and the person is not paid 3, and ultimately you strike off the name. And the second thing can be, you have already got overall 10 rupees, he has already paid 7 but failed to pay the remaining amount. So in this case, it is the called up value. Okay? Share forfeiture is the advanced level of the company accounts. Okay, now let's look forward towards the next question. Right shares are the shares which are issued to the direction of the company, are issued to the existing shareholders, are issued to the promoters, or are issued to the vendors. Right shares are shares which are issued to the previous, the loyal shareholders, I would say, for investing their money into the company. So we do the area of right shares. Right shares means the market value of the share would be 100. You are getting that particular share for rupees 60 because you are an old shareholder of the company. That's called right shares. So these are issued to the existing shareholders of the company. Done? Okay, so that's it for the day, everyone. This is where I end my session. But before I end my session completely, I hope you have already started with your studies. If you haven't, then this is high time, everyone. You should start your study as early as possible. And what should you do at this point of time? If you're looking forward to it, then check out our website or our app for further details. You can take up www.adda24/7.com. There you can find the area of JIB, CIB, Mahapack. Okay? This is for JIB and CIB Mahapacks. If you're looking forward towards only JIB, the Mahapack is there. For only CIB, the Mahapack is there. For JIB plus CIB, the Mahapack is there. If you take up the JIB and CIB ka Mahapack, what's the fun of it? See, if you look forward to this particular area, this is going to be really useful. Why? When we talk about this area, then you get, there is one more thing. Due to the eve of Teachers' Day, we are giving you a discount of Guru 80 at this point of time. Just have to apply Guru 80. That means you will get 81% discount, everyone. 81% discount plus double validity. You buy it for 12 months, you get it for 24. So this is the perfect time that you should buy this particular pack, because you will get it for a minimum price and at the maximum benefits. What are the benefits? regular classes, live classes, recorded classes, previous classes, the classes that we are going to have in future, everything is available for you. Marathons, mega marathons, whatever has been already conducted, we will get that particular part. Then you will also get doubt classes. At the same time, you will also get the area of mock test paper, है ना? So if you're looking forward to it, then check it out on our website, on our app, and don't forget to use Guru80 to get the maximum discount and double value account. So let's talk about it further. This particular chapter relates to the area of module B. Here comes the first question. What is the purpose of the financial income statements? To show the company assets and liabilities. Then the second point is to report the company's cash flows. Then to measure the company's profitability over the specific period, and to provide details about the company investments. When we talk about the income statement talks about the profit and loss of an organization, है ना? It talks about nothing else. Income statement is basically a statement which is meant to show the profit or loss of an organization, right? So in this case, it helps in measuring the profitability. So to measure the company's profitability over a specific period. Which type of shares are typically entitled to fixed rate of dividend, irrespective of the company's profits? Equity shares, preference shares, cumulative preference shares, or bonus shares. Which type of shares are typically entitled to a fixed rate of dividend? See, equity shares are the residual shareholders. They get whatever is left over in the organization. They do not get any other sort of money at all. So equity shareholders are those shareholders who have got the money there, right? Then we have preference shares. When we talk about preference shareholders are those people who get a preference at the time of liquidation and at the time of liquidation number 1. And okay, one is liquidation. Second point would be related to the area of at the time of dividend distribution. At the time of dividend distribution, they will come first and take the money. At the same time, when it is about liquidation, at the time of liquidation, that means the company is ending. At that point of time, even he gets more money. Okay. Then we have cumulative preference shares. Cumulative preference shares means which is accumulated. Okay. So when we talk about accumulated means, this means if in case the company is supposed to pay dividend in the first year, dividend in the second year, dividend in the third year. They paid the dividend for the first year, they paid the dividend for the second year. In the third year, they faced a loss. Then in the fourth year, when they will pay dividend, they will pay dividend for D3 and D4. That is why it's called cumulative. Cumulative means to collect. This means the preference shares are collectively given the dividend later on. If we cannot give it right now, we will give it later on. Bonus shares are free shares. So the answer is preference shares. Okay? These are those people who have a fixed rate of dividend. Whatever happens, they normally get a fixed rate of dividend, while equity gets the leftover. But always remember, even though equity are the scavengers of the organization, they get the leftover. Equity shareholders have the voting rights, because ultimately these people are the owners of the organization. They have invested for a longer period of time in the organization. Their investment is way more than anybody else in the organization, right? Now, what is the primary purpose of share capital account in the company books? What is the primary purpose of share capital? To track the market price of the shares, to record the purchase and sale of shares, to track the nominal value of shares, or to record the company's expenses. What is the primary purpose of share account? When we talk about the primary purpose of share capital account, when we talk about the share capital amount, we are trying to note down what is the book value of the organization, right? Before we actually find out the true value of the organization outside, we need to know what is the true value of this organization inside. That is, we need to know the book value of the shares. है ना? What is the net worth as per our assets and as per our liabilities and as per the organization's performance, that is their profit and loss. So in this case the correct answer would be nominal value. That is, it is helpful in finding out the book value. Oh, just give me a moment. What is the accounting treatment for forfeiture of shares? What do you mean by forfeiture, everyone? Forfeiture means the person was supposed to pay. Right? What is the accounting treatment for the forfeiture of shares? The share capital is reduced, the share capital remains unchanged, the share capital is increased, the share capital is transferred to the reserves. What is the accounting treatment for forfeiture of share? Forfeiture means we ask the particular person to pay, but he said, I don't have the money, I cannot pay you, I'm sorry, or he's not responding at all, and ultimately we decide to scrape off his share. That means we decide to write off his part of share. So it would be the share capital is reduced, the share capital remains unchanged, the share capital is increased. In this case, the share capital is reduced because we thought we are having 10 lakh rupees of shares, but among them there are some defaulters. Maybe they are the defaulter of around 30,000 rupees. So this would reduce your amount to 9,70,000 as the share capital. Okay? Then what happens when a company issues shares at a price lower than the face value? It is known as rights issue. The excess of recorded as a capital reserve. The excess is credited to the profit and loss account, or it is not allowed under the company law. What is the what happens to the company when issues price is lower than the face value? This is not good. Normally the companies should not be issuing share at the price which is lower than the face value, right? It is a right issue. It is basically excess recorded in capital reserve. Overall, this is not allowed. The shares cannot be issued at discount. Earlier they could be, but now that is not allowed. Okay. So basically what happens when the company issues shares at a price lower than the face value? When we do that, normally it is not allowed. So as per the Income Tax Act, it is clearly said that you cannot issue shares at a discount until or unless it is related to ESOPs, Employee Stock Option Plan. Okay, it is employee stock option plan. Under employee stock option plan, you are not allowed. You can issue shares to your employees at a lower price. Which of the following is not a type of preference shares? Cumulative preference shares, non-cumulative, redeemable, and equity. Which of the following is not a type of preference shares? which is not a type of preference share. Preference share, cumulative preference shares means, as I told you, if I fail to pay the dividend for the first year, then in the next year I'll pay for D1 plus D2. That is cumulative. Non-cumulative means it doesn't get collected. If 1 year there's a loss, then in the next year you will get dividend only for that particular year. Redeemable preference shares, which is paid off, and in our country only this kind of thing is allowed, because after 20 years you must pay to them. And then we have equity preference shares. What do you mean by equity preference shares, everyone? There's nothing called equity preference shares, because preference shares are different from that of equity. Which type of share does not have a special right or privilege? Equity, preference, cumulative, and redeemable. Preference shares have got a lot of privileges. There's only one kind of share which has got nothing. They just live on leftovers. That is equity share. But how harsh it sounds, huh? That equity shareholder lives on leftovers. So does it really happen that way? Overall it doesn't, because when the company makes surplus profit, then what will happen? Who will have that particular charge? It will always be of the equity shareholder. Nobody else is going to have it. Now if the company earns this much chunk, they will face it. If they earn this much chunk, then they'll have to face it. So ultimately this is what happens, you know. Done. So equity shareholders do not have any kind of privilege. They live on leftovers, so they are living on that particular part itself. Done, everyone? If a share of rupees 10 on which rupees 8 has been paid up is forfeited, it can be reissued at minimum price of rupees 10, rupees 8, rupees 5, rupees 2. If the share of rupees 10 on which 8 has been paid up is forfeited, it is forfeited, it can be reissued at a minimum price. See, the point is, the person was supposed to pay 10 rupees and he paid 8. After paying 8, he said, I cannot pay you further. If I want to issue, it should not be less than 10 rupees, because I told you the share cannot be issued at a price less than its face value. So technically I need to have this 8 plus 2, 10 rupees, minimum 2 rupees, and maximum whatever I would like to charge. Because 8 is already received on the share, I can charge just the last 2 rupees and I'll be done with the entire face value. So in this case the answer is 2 rupees. Always remember, the shares cannot be issued at less than the face value of the shares. Okay? It cannot be less than that. It's a rule. Next question. If the vendors are issued fully paid up shares of 1 lakh in consideration of net assets of 1 lakh 20, the balance of 20,000 will be credited to goodwill account, capital reserve, then we have vendor or the P&L. If vendors are fully issued fully paid up share of 1 lakh, and consideration of the assets, I bought some assets, the assets are worth rupees 1 lakh 20. If the vendors are issued fully paid up share of 1 lakh, so to share capital, they are issued fully paid up share of rupees 1 lakh. So what about the remaining amount? This will turn out to be either security premium or capital reserve. So in this case it would be capital reserve. Okay? It can be the security premium or it can be capital reserve. Done? which of the following should be deducted from the called up capital to find out the paid up capital? Calls in advance, calls in arrears, share forfeiture, or discount on issue of shares. Which of the following should be deducted from the capital? Acha, everyone. What should be deducted? The amount which other people are not paying, hai na? Only that amount has to be the one which is going to create a chaos. It is calls in advance, calls in arrears, share forfeiture, or discount on issue of shares. It would be calls in arrears. When we write our share capital, when we write our authorize is the one for which we have taken permission. Authorize, then we have subscribe, the one which people take up. Then we call them for money, that is called up. Then we have after called up we have paid up. From called up we remove the calls in arrears. So in this case, since the remaining is not paid, so we'll have to find out the value na. So this is the one. So in this case we have to remove the calls in arrears first. Normally, but in practical life there is no more share forfeiture. Earlier it was. In today's world there is no share forfeiture. Next question. Next question says A Limited purchased a machinery for 1,80,000 for which it is paying by issue of shares ₹100 each at a premium of 20%. How many shares will be issued as consideration? 2,500, 2,000, 1,500 or 3,000? A Limited purchased a machinery of 1,80,000 for which it is paying ₹100 each at a premium of 20%. So basically it's gonna be a 1,80,000. The purchase consideration, the formula is PC divided by face value plus the security premium. If there is no security premium, then we will not record it. It's gonna be 1,80,000 divided by 120. So it's gonna be 1,500. Okay? The answer is 1,500. There are 1,500 shares, everyone. This is the formula for this particular portion. Whenever we have to calculate the portion there, it is going to be the purchase consideration divided by face value plus the security premium. So this is it for the day, everyone, and happy Janmashtami. Due to the eve of Janmashtami, or we can say that due to the birth of Lord Kanha or Lord Kanhaiya, Krishna, whatever there are so many names, hai na? So when we talk about this particular eve of Janmashtami, we are providing you certain discounts, and let's talk about that on our regarding our courses there. So let's go ahead and check it out. You need to go on to our website, that is www.adda247 if you're looking forward towards your JIB preparation, right? You have to go on to the area of JIB and CIB. Here you will find JIB and CIB Mahapack. Right now Mahapacks are the best point because under Mahapack you get everything. Our normal classes, our detailed classes, our revision batch, our previous batch recorded which is already done, marathons, mega marathons, paid class, even the area of live classes. You are getting e-books, you are getting the area of unit testing, you are getting the area of marathons and mini marathons, plus you will also get the mock test paper. So we are introducing so many things for you, so why not to utilize this particular opportunity, hai na? So what you can do is you can check out our JIB CIB Mahapack, which is a combination of both, and you can use the code KANHA80, right? That is KANHA80, and you can get it at 11,577. Both JIB and CIB. This also includes the CIB elective paper as well. For elective paper, you don't have to go through the hush and rush ki acha what should I do, which should I buy. You don't have to worry about that. You just have to buy one particular course and you will be sorted. ठीक है ना? Done, everyone? So if you're looking forward to it, then kindly check it out on our website and our app for further details for JIB and CIB Kamaha pack. Don't forget to use the code KANHA80, and if you want to buy only JIB Maha pack, that is also available for you. You can buy it for 6719.20. If you'll buy it for 6 months, you'll get a particular double validity of 6 months again. So you've got 600 hours of live classes, 298 test series. A good number of test series are available, everyone. Plus we have got 273 ebooks along with 637. We're not going to talk about fund flow. I'm going to totally talk about cash flow. Now, what do you mean by cash flow statement? Cash flow means what? Cash means inwards or cash going outwards, है ना? So that can be the case when we talk about cash inflow or cash outflow, that is called cash flow, है ना? So when we talk about cash flow statement, it talks about inflow of cash, outflow of the cash, and what exactly is cash? That means cash and cash equivalent. Okay, let me tell you about the cash and cash equivalents. First and foremost thing is cash and cash equivalents. What are they? Cash and cash equivalents includes what exactly? It includes cash balance. It includes bank balance and cash balance, bank balance, and the last one it includes is marketable securities. All those securities which can be sold within a period of 3 months at any point of time, and there will not be a major change in the price of that security. We will call them marketable securities. So this is the point regarding this area. That means when we talk about cash balance, bank balance, or marketable securities, this is what we talk about. So cash and cash flow statement or fund flow statement, totally focused upon cash flow for the moment. Cash flow talks about inflow. That means when you receive money. Outflow, when you lose money. है ना? So these two are the points. Then what is the first question? It says, for the purpose of preparing cash flow statement, which one of the following is considered as operating activity? Do you know when we talk about cash flow statement, na, under cash flow statement, we have three things. We have three kinds of activities under cash flow statement. The three activities are operating, the money that we earn by doing our business. First is operating income. First is operating income. Second is operating. Then we have investing. And third is financing. Acha, let's not call it income because that's wrong. I'll call it operating activities. The activities which are done wholly solely for the business. And investing activities, which is when the organization is involved in investing somewhere. That is in terms of capital expenditure. That means they're buying an asset or they're selling an asset. Financing activity is about arranging a loan. Getting money for the loan there or getting finances for the business there is a part of financing activity. So we've got three kinds of activities: operating, investing, and financing. Operating talks about the money which the business earns or spends on the day-to-day business activities. Investing talks about the purchase of fixed assets, then we lose money. Sale of fixed assets, then we gain money. And then we have financing activity. Financing activity means arrangement for loan or payoff of loan. Arrangement of capital or losing the capital. Okay, so what next are we going to talk about? Based upon this, I'm going to talk about what are those different activities which might be covered in operating, which might be covered in investing, and which might be covered in the area of financing activity. So let's talk about it in detail, everyone. The first question was based upon operating activity. That means I'm going to ask you what will happen in case of an operating activity. Acquisition of machinery, purchase of goods for sale, issue of debentures or repayment of term loan. For the purpose of preparing cash flow statement, which one of the following is considered as operating activity? Operating means day-to-day business. Acquisition of machinery. We don't acquire machinery every day, na? Okay, apologies everyone. Now, do I purchase and sell goods every day? Yeah, that sounds better. That can be called an operating activity. The next one is issue of debentures. Debentures means a debt. You don't raise a debt every single day because you have to pay it back as well. Na? Repayment of term loan, again something which we do not do every single day. We do it once in a blue moon. So in this case, the correct answer would be purchase of goods for sale, because we are going to purchase them and maybe I'll be selling it in a few days as soon as the finished goods is ready. And we do this thing if I'm a huge business, na, this is a very good thing. I'll be doing it in multiple times. While I'll acquire a machinery once in a blue moon. I'll issue debentures once in a blue moon. When I get money, I'll repay with the loans. You know? So in this case, the correct answer is the purchase of goods for sale. Next point. For the purpose of preparing cash flow statement, which one of the following is considered as financing activity? Financing activity means the activity which relates to acquiring finances for the business. Financing activity, which includes financing activity can be for acquiring the loan, for acquiring the capital, right? They are all covered here. Issue of fresh capital, processing of goods, redemption of debentures or sale of manufactured goods. When we talk about financing activity, the correct answer is going to be issue of fresh capital, because processing of goods is a day-to-day thing. Redemption of debentures, which is basically which one of the following? Acha everyone, sale of manufactured goods is basically operating. This is operating. This is operating. Selling and processing all are a part of it, because we are going to spend and we are going to have money. When we talk about redemption of debentures, redemption means to pay off a loan, and issue of share capital means to get the loan. So in this case, this will be an outflow in the financing activity and this is an inflow. Okay? This in the financing activity would be a plus and this one would be a minus. So technically this question is wrong, and in this case both these points A and C are to be considered. So in this case they have written issue of share capital, but redemption of debentures is also a part of this, everyone. So in this case the correct answer is going to be issue of share capital. For the purpose of preparing cash flow statement, which one of the following is considered as investment activity? Buyback of shares, redemption of debentures, manufacture of goods or disposal of machinery. Now what am I looking forward to, everyone? For the purpose of preparing cash flow statement, we are thinking about preparing the cash flow statement. I am looking at investment activity. Investment means I am putting money in such a way that investing activity can deal with acquiring an asset. When I purchase an asset, I lose money. Or first is acquiring an asset and then we are selling an asset. A long-term asset rather. Acquiring means getting the asset, selling means paying for that. Then this would be inflow or outflow. When we sell, we have an outflow. When we buy, it's an inflow. So buyback, redemption, manufacture, disposal. So in this case, the correct answer is going to be looking at investment activity now. Disposal of machinery. Buyback of shares, it's a financing activity. Redemption of debentures, again a financing activity. In both the cases, it's an outflow because we pay to the other person. No? And then we have manufacture of goods is an operating activity. And disposal of machinery, that's an investing activity. So with every question, I'm going to let you know all the different points. So whenever you are dealing with such questions, be very clear about what are we going to do with such questions. That is disposal of machinery. Acha, if I dispose of a machinery, is it going to be inflow or is it going to be an outflow? See everyone, if I sell an asset now, I get money. If I buy an asset, it's an outflow because then I have to shell out money. In this case, I will get money. So in this case, the correct answer is disposal. Okay? Disposal is an inflow. It's an inflow. Looking forward towards the next question. Which one of the following would be a source of funds, everyone? Increase in fixed assets, increase in inventory, increase in current liabilities, or decrease in capital? Which one of the following is a source of funds? If I want to look at the source of funds, everyone, source of funds means I'm going to get money. Increase in fixed assets, I'm going to lose money, right? If I have to buy this digital pen, I have to pay off. So that would be covered there. Then increase in inventory. Inventory is basically when we purchase goods, I'll have to pay money. It's not a source. Increase in current liabilities or decrease in capital. The moment there's a decrease in capital, that means I've taken the money out of my business, which is called drawings. And when we look at the increase in current liabilities, everyone, increase in current liabilities means I'm getting more loans. है ना? More loans means plus money. So in this case, the correct answer is increase in current liabilities. Which one of the following is a use of fund? Increase in capital, increase in current liabilities, increase in term loan, or increase in receivables? Which one of the following is a use of funds? Use of funds means where we are actually using the money. Increase in capital, we are getting money. Increase in current liabilities, again, we are getting money. Increase in term loan, we are still getting money. So that means in the first three, it is basically inflow of funds. That's not application, it's just inflow. And increase in receivables, everyone. When we have increase in receivables, that means we have more people from whom we'll have to receive money. That means we gave or utilized our credit for them. So it is basically use of funds. The answer is D. Increase in receivables. Done, everyone? Which section of cash flow statement includes the net income and adjustment of non-cash expenses like depreciation? First of all, now they find the net profit and they adjust it for non-operating, number one, and non-operating and one is non-operating, then is non-cash. Yeah. For both these kind of things, they have to eliminate their effect. If it's a non-operating income, removed by subtracting it. If it's a non-operating expense, then add it back. We are going to nullify the effect of that thing. So how do we nullify it? Be it operating, be it investing, and be it financing, or none of the above. So basically in this case, what happens is this is all done in the area of operating activities. Done, everyone? So operating means day-to-day working of an organization. Okay, let's go to the next question now. Which one of the following is a source of cash, everyone? Among the following, which one is a source of cash? Which one of the following is a source of cash? Source means from where you're going to get cash. cash deposit into bank, cash withdrawn from bank, sale of goods costing 10,000 and for 8,000, and then we have sale of marketable securities for cash. Which of the following is a source of cash? From where I'm going to get cash is when I sell something, cash deposit into the bank or cash withdrawn. Cash and cash equivalents are just changing. They're not increasing. If I keep the money in my bank account or in my hand, it doesn't matter. Sale of goods costing 10,000 for 8,000. The goods have been sold. So this is a loss. And sale of marketable securities for cash. It's just a change. But from this portion, even though there's a sale, we are still getting the amount now. So sale of goods costing 10,000 for 8,000. The organization has got 10,000 rupees. Right? Now, in this case, our loss is of 2000. In this case, what will happen? The goods are for rupees 10,000 now. So we sold it for 2000 less. That means we sold it for 8,000. Now, in this case, this 8,000 that we are receiving is still money that we are receiving now. The question is basically a source of cash. From where you are going to get the cash? Because in other areas, we are just changing the form from cash to marketable securities or marketable securities to bank. That's not something which we can say there's an inflow of money for the community there. So in this case, it would be sale of goods costing 6,000 for 8,000. Next question, which of the following is incorrect about the statement of cash inflows? It is provide that information that about the cash receipt and cash payment. It reconciles ending cash balance as per bank. It provides information of operating, investing, and financing. It explains the deviation from the earnings. If you're deviating from the earnings there. Which one of the following is incorrect about the statement of cash flows? Acha, cash flows is basically when we receive money. If we talk about it provides the information, see, yeah, it does. It gives us the information about inflow and outflows. That is correct. So that it reconciles ending cash balance. Yeah, it also does that. It provides information about operating, investing, and financing. That is also true. So there is nothing called D there. This doesn't really sound good, right? So after this, what next do we have? Here comes the next question, everyone. There is a machine worth rupees 40,000 which has a depreciation already included in it. This was sold for 34,000. It doesn't matter for what amount it was sold. This amount is there. We are receiving it now. That means the organization is having cash inflow. Simple rule. It doesn't matter if it's an inflow and outflow. The point is they're talking about cash flow. So even if it's sold for 34,000 and we are getting the cash, if we are getting the cash, the whole thing is sorted. That is cash flow of 34,6, investing and financing. I am selling an asset, so it's an investing activity. It's not a financing, it's an investing one. Because sale of fixed asset is a minus, purchase is a plus. Okay, so in this case, the correct answer is going to be cash flow from activities is an investing activity. Done, everyone? Chaliye, that's it for the day. And before I show you our app, our website there, just go on to this area, click on the area of www.adda247.com. As soon as you will find this area, that is www. There it is. You just have to go onto the area of this particular app and slide it down. Go on to the area of JAIIB and CIB. On the area of JAIIB and CIB, if you open up exclusively the JAIIB and CIB, this is where you will find JAIIB CIB Mahapack. Under the JAIIB CIB Mahapack, you can take up the JAIIB Mahapack on the CIB, Mahapack JIB plus CIB is way better, because there you just have to spend a little amount and you will get both the particular courses covered, and that too at a very small price. As you know, the Janmashtami Eve is going on, so that means if you want to look forward to it, you can purchase it at you can use the code Kanha 80 and you can purchase it for 81% discount along with double validity. So if you're looking forward to it, then kindly check it out on our website or on our app for further details, everyone. So thank you so much for being there. We'll be meeting in the next class. Bye bye.